When I came on board the War Room back in the summer of 2009, I was brought in to help interpret this vision. And shortly after coming on board, I was visiting Mayor Robertson up in Vancouver just as a friend, and he said to me, the power of the War Room can be very helpful to us as we try to achieve our CO2 reduction targets. And that the most important thing you could do is help us access private capital. And what's interesting, and so we built the network of original 15 cities, including New York, and we went out to map the industry and see who is doing what in the industry. And what's interesting about that is initially for the first year we were very focused from the city perspective, thinking that the programs would be administered through the city by the city and private capital would be brought in under those mechanisms. And we had a real shift somewhere it must have been about a year ago or 8 months ago, where we realized that the capacity of the city, one thing that the mayor had told us is that what we were hearing over and over is that sustainability was one of 50 priorities of the city, and energy efficiency was one of 20 priorities within that sustainability agenda. So the capacity simply wasn't there to do this in the way that we could achieve a gigaton scale, which was our mandate. And so in the course of meeting all these companies and the CEOs, which is one of the nice things about working in Richard Branson's War Room, it was very easy with Jigger throwing people on a daily basis our way to get to know them. And what struck us, and I think Andrew talked about this a little bit this morning about co-creation and convergence, is it really was, this consortium is really, the new idea here is in the way in which these companies are working together and how they're addressing the market. And it was in December of last year that Energii came out with its product, and it really changed the game. And literally within a couple-week period of time, I received about 10 emails and calls saying, do you know about this company Energii up in Peabody, Mass? And it seemed about a good time to reach out. And so with the insurance, it enabled a lot of other players to enter the market to provide the performance guarantee, as was said. But then it became almost like a cultural question. Would these companies actually be willing to lift up their kimonos and say, here's what our objectives are, how can we do this together? And it was really their willingness and openness to doing that that made this possible. And together, they were able to be much more effective in securing these districts and then having the sort of credibility to be able to execute on that. And I feel like now we've addressed the split incentive issue, the performance issue, the credit issue with this, and then the last remaining thing is the adoption question. What's the uptake going to be? And having certainly a member like Lockheed Martin in the mix with their just incredible capacity for engineering and business process, it brings a lot of comfort to the communities to know that they'll be a major driver in it. And it's not exclusive to Lockheed. There'll be many, many other contractors in there, but we felt we needed to have a member of the consortium in there that could start getting projects done. So that's, so before I go on about that, I want to introduce Dennis Hunter, and he'll tell you a little bit about Y-Green and his role in the consortium.
Okay, thank you, Murat. I got into this business as my career evolved. My background, just to let you know what skill sets were needed in this industry in real estate. So I started out doing syndications when I was probably a young guy. Did that for a while, did that for about 10 years. Then I decided, well, geez, there were opportunities in development, so I started doing developing. I then decided, gee, if you're going to develop it, you may as well build it. So I started building it, and then I thought, well, geez, you have financing problems in bad markets. Looking at this crowd, there's probably not a lot of you out there that know about the market in 1980, 82, but it was pretty vicious. So I thought I better get in the finance world. So I started a bank with a friend that ended up being quite successful that I chaired for about 20 plus years. And I sat on the board for quite a number of time and still am an owner in an energy exploration company. So there was sort of a knowledge about all those things. I then, at sort of semi-retirement, thought, how do I put all those skills together that also involved a strong political element? hired someone from the green sector, a heavy environmentalist, and asked them what they needed, and as most people do, they needed money. So I thought, well, okay, I kind of know how to get money for you, so I set up a program to enable local people in the county I come from, Sonoma County, California, to get some funds. It was really a camouflaged name change home equity loan we called the green loan, very easy for bankers to accept as a new product. Market then changed, as some of you may probably observed in starting in 2006, the mortgage market went totally crazy. So that equity went away. I then found that California had passed a green energy law, as we called our program, that enabled an assessment to be used for retrofits for energy efficiency as well as renewable energy. So I tried to figure out a model that worked. I figured out what I thought was a very good model to work, and started vetting that with some of my business friends that accumulated over the years. And from that, we came up with Y Green Energy Fund. Now, what Y Green Energy Fund does is they do a turnkey operation with the city. Cities typically in this economic environment don't have any money. They can't staff up. They don't have the money to do a startup. You know, for a typical city, like Sonoma County is a county that did it, and it was about $2 million for them to do the startup. We pared that down just through more efficient systems, but we advance whatever money they need to do a startup. We give them the personnel they need and give them the turnkey. So we administer the program completely, provide all the funds for the assessments, aggregate those, and then Barclays markets those in a securitized pool, as part of a securitized pool. The part of that program involves using contractors, which is a critical part because contractors tend to be a little bit looser than some other professions, and they kind of come and go with the economy. There were a couple thousand in our economy in Sonoma County in 2006. That dwindled to probably 300 now. So they come and go. They're very competent guys, but they're very much individualistic. So we set up a very strong education program and certification program for those contractors, which we think is a very critical part. We also teach them how to market their services and make the energy argument as well as the job argument when they're out trying to use our funds to sell people on the notion of doing energy retrofits and renewable energy. So that's what Y Green Energy does, and we do it with this new consortium, and we think it's going to be just fabulous and really spread across the country quite quickly. As some of you may have read, Southern Florida is engaged, Sacramento is engaged, the rest of the county areas, about a 4-county area around Sacramento is going to engage. Large portion of Southern Florida looks like they're going to engage, which would be quite a good population base, about 10 million just in Florida. So if we can get to some big population coverage, maybe 110 million, 120 million people in the country, some very, very huge results are possible in gigaton numbers. So that's what we do. Thanks.
Great. Thank you, Dennis. Brian, do you want to?
Yeah, I'll give everybody just a couple-minute overview of Energi. Energi is an industrial reinsurance company. We, in turn, provide risk management and insurance programs. Our core business is in some of the major sectors of the energy industry. And we take risk on these programs through our reinsurance operation, and we develop these programs and manage them. Hanover Re became a shareholder of our company in 2009. The CEO of Hanover had a desire to get into these performance warranties to enable alternative energy growth, and specifically saw the opportunity here in the U.S. market to be able to do that. We had looked at this particular product that we developed back a number of years ago, primarily in 2007 and 2008. We couldn't get any of the U.S. carriers interested in writing this cover, and it was energy savings insurance. And as some of you might have seen, the GAO report in 2008, the analysis of the government projects that's been done primarily by the Super 16 ESCOs, that they clearly saw that this product was needed. And so this product was needed to come into the marketplace to create more competition and allow that next level contractors to be able to compete in this marketplace who could probably do some of the lower end projects far more cost efficiently than the larger ESCOs. So what resulted is that we went into the development process to build out this product, and we clearly saw where this product was going to be an important mechanism as insurance can be, to be able to transfer risk and protect risk exposure. In this particular case, protect that cash flow risk exposure that exists if those savings do not result as a result of poor installation and design by the contractors. So Energi's product that they've developed, Energy Savings Warranty, we act as the managing general underwriter here in North America. We're introducing this product to the Canadian marketplace in the next few weeks. And it is insured by Hanover Re. Their insurance company is the International Insurance Company in Hanover. It's a wholly owned subsidiary of Hanover Re. We own the intellectual property to this particular product and the wording, and it was a challenging product to be able to put together. Why it wasn't adopted and broadly during the late 90s, we went and fixed some of those issues and elements on why it didn't get broadly adopted and brought it back into the marketplace as it is today. So clearly this product will protect the cash flow savings and will enable a next tier of contractors to come in where the ESCOs, larger size ESCOs, are primarily focused on those larger size projects in excess of $5 million in the MUSH market today. This will allow, again, that next level of contractors to come in. We'll be able to screen those contractors as a result of our participation in the consortium here, because the underwriting is no different than what is done to get a contract surety bond today. You know, you have to look at the contractor's financial ability to perform the installation and design and be able to execute upon that installation and design. So we're excited to be part of this because clearly from our perspective, this initiative needed to happen. And from my personal belief, you know, I'm excited that we could participate in creating green jobs that are critical to drive our economy over the next several years. And so we're just excited to be able to participate in that.
Great. Thank you, Brian. Greg?
Hey, I'm Greg Kaplan. I'm responsible for energy performance contracting at Lockheed Martin. Our Energy Solution Division provides utility energy efficiency program implementation support to utilities across the country, supporting utilities in supporting their commercial and industrial customers' efforts to reduce their energy consumption. So we are using energy engineering support and marketing capabilities to help, again, utilities help commercial and industrial customers reduce their energy consumption. We've been doing that for utilities from California to PG&E in Southern Cal Ed in California to Con Ed in New York and many utilities in between for years. And we have recently entered into the energy performance contracting domain with our existing federal customer set, where we're developing projects for the United States Air Force and the Department of Energy. And we're always looking for opportunities to bring these core capabilities of systems and engineering, technology neutral integration of systems, vendor management, quality assurance, these capabilities to new customers. So we've been following very closely the Carbon War Room's efforts to study the market, identify the market failures, and come up with a set of solutions that had the potential to achieve the scale that policymakers and industry alike have long sought in the commercial retrofit market. And this consortium is the culmination of that dialogue over a couple of years, so that we have identified the market enablers that make it possible for us to bring this capability set to commercial and industrial asset owners. The financing mechanism that promises the scale and the insurance product that mitigates, not only mitigates Lockheed Martin's performance risk, but also provides a level of comfort to investors and asset owners alike. So we believe, as Murat said, we're one implementation provider, and this market is going to be opening up for long-time ESCOs and new entrants to the market alike. And it's that expanding market that we're excited to enter together with our consortium partners.
Great. Thank you, Greg. So we wanted to take a few questions, but before we do that, I had a couple questions. One question I wanted to ask each of you, just for a brief response on, is when you think back to the initial sort of concept of being part of a consortium, what was it that appealed to you, or did you have to kind of overcome internally within your organizations to sort of function in a sort of a different, more collaborative manner? Dennis?
We're a startup. The startups are hard. I've done lots of startups, and they're always really hard. So for me, getting the support of the insurance program and the expertise that Brian and his company Energy brought to the table for help us in a collaborative effort and to expand a program, and then Lockheed in the technical area that I had essentially no expertise in, that could respond to market with the credibility that Lockheed has, was very, very important. And I thought it was the synergy would really provide a great launching platform for our company and support it. And I think it's really working already, and it's very young.
From my standpoint of view, I looked at what was going on in the market, and these energy efficiency projects have been pretty much isolated to the MUSH market, and that's the municipalities, universities, schools, and hospital market. So that's been the primary projects that are being done. From my standpoint of view, this was an easy decision to make, because when you looked at it, this truly was the best viable option that was out there to bring an immediate impact and bring the ability to have an impact on that marketplace outside the MUSH marketplace. And again, I give Dennis a lot of credit. I've told him, I says, your tenacity factor level for doing startups and not throwing the towel in on this, I got to give you a lot of credit for not doing that over the years with the obstacles that have been put up, and finally now coming to the position of being able to bring the capital together with the engineering capability, and our product really is an exciting opportunity for this potential marketplace.
There is, it just crystallized even more that the irony that it's these entrepreneurial efforts that have made it possible for Lockheed Martin to be a part of the consortium, in the sense that, as I said, we've been tracking this market for a couple of years now, and we all know the market failures that have thus far prevented it from becoming a more significant part of the existing energy service company or ESCO industry. It's never achieved more than 10% of overall ESCO revenue, and my ability to enter this market sector and build a practice, an energy performance contracting practice, required both a credible, plausible path to the expansion of that market and credible risk mitigation tools. So the entrepreneurs to my right have given me the ability to convince the corporation that this is a new market, an adjacent market opportunity that we can explore with manageable risk, and that was the key to being able to participate.
Great. So is there a microphone for some questions? Okay. Questions, anyone?
I don't know much about PACE programs, but I believe Fannie Mae and Freddie Mac issued some ruling that set back the program a bit in 2010. Could you comment on that and on whether those setbacks are an issue for this consortium?
Okay, I'll have Dennis answer that, but I'm going to repeat the question for the web viewers. The question was about, the gentleman said he didn't know that much about PACE, but understood that the FHFA, that there was a ruling in 2010 that put a stop or slowdown to PACE, and could you respond to how this might affect the consortium?
There was a ruling. It wasn't a ruling, it was a letter sent out by FHFA. It seemed to it did slow things down a lot, scared cities, scared counties. They just had a big setback in federal court in California. They were sued by a number of parties in the country, very responsible parties, Sonoma County, Palm Desert.
The FHFA was sued.
The FHFA was sued. The plaintiffs were the two previous parties I mentioned in the state of California. There was a decision issued in the court that seems to be a great setback for FHFA, but it doesn't affect this consortium at all. This is devoted to the commercial sector, so it doesn't really affect us at all.
Great. Another question? Okay, wow, it's a very, oh, there we go.
Is there an outreach plan to bring?
Okay, the question is there an outreach plan to bring this to other cities? And what's next after Miami-Dade County and Sacramento? And that's funny because that was my question. So, yeah.
Our company announced today that we are going to be holding initiatives in the New England area to educate the stakeholders, and those stakeholders being the municipalities and cities and towns, and also building owners and contractors, so that they can understand what they can do as organizations to enable this to go forward in the New England states. So we're going to start out in Massachusetts and do that in October. We've already gotten support in this initiative from Senator Kerry's office, and also at the state level with a couple of state senators that are actively involved in wanting to move forward these initiatives.
Great. And Dennis, do you want to say a sort of?
Sure. Well, those are the New England states that he's going to be covered and focused on, although Brian's company have market presence throughout the United States. So there are 26 states total now, plus the District of Columbia, that have PACE enabling legislation in place. There are a couple of those that require lender consent. That's really a stillborn program that it absolutely does not work. It's been proven to not work. So those states right now are kind of on hold. There are a few other states that have flaws in the program, and it appears as though there's some interests that are opposed to this program, some of the fossil fuel interest. But we intend to the states where it's currently viable, as a function of their enabling legislation and the underlying legislation, which would be maybe their bond, their powers that they have under existing bond laws in the state, which are typically 100 years or so old. In those states, we're going to very actively pursue participation by all cities and counties to join this program and get something done as a job stimulus program and a climate change retardation program to really help out.
Great. And just one point to add to that, we were just all in London for the Carbon Worms Creating Climate Wealth Summit there, and the panel was assembled, and there was a lot of interest from the EU and the UK governments about how to take some of the inspiration from this work, mostly having industry-led, industry-driven initiatives that could then, the government could sort of play a mobilizing role and an assisting role, but not a central role in doing. So we're also looking at that. And as it said in the video, Dennis is going over to China. So we really do hope that this can spread like wildfire globally. Is there another question? No?
Is it new jobs or is it jobs? Is it replacement from existing?
Well, it's new job creation. Oh, I'm sorry. The question is, in the press release, it talks about a job number, and we've and the question is that new jobs or replacing existing jobs? When you look at unemployment in the United States, the construction sector has been most hard hit because of the real estate collapse. And so there's a lot of capacity in the labor market. And so it won't be, okay, you have to be unemployed to work on this. It's probably not like that, but this is sort of business that would soak up some of that capacity. And I just want to, you know, we've had a few numbers flying around in terms of the analysis, and I think we finally have a number we can say. For the 650 million, we expect 22,000 jobs and 206,000 metric tons of CO2 as a result of that. Reduced, you know. 22,000 jobs and 206,000 metric tons of CO2 reductions annually. Is there another question back there? Okay, let me just, I'm gathering that Brian is going to answer that one, but I'll just repeat the question. Question was about the insurance and the reinsurance and how that industry has responded to this, and is there some expectation that there will be competing or new products alongside it? Is that the question? Yeah, basically. Okay, Brian?
Yeah, I think the first thing to address is that the insurance industry, organizations like the NRDC, the Carbon War Room, the Clinton Climate Initiative, had approached a number of carriers to write this coverage for them, bring energy savings insurance back into the marketplace. They were unsuccessful in doing that, and foreign carriers and also U.S. carriers were reluctant to make the investment. In addition to that, U.S. carriers have been very reluctant to write these type of warranty backstop covers, which are contractual liability policies. They haven't had great success in that marketplace. Whereas in Europe, it's very common for companies that provide warranties for their products to, in turn, buy insurance to backstop that. So, you know, companies like Munich and Hannover Re have had a lot of experience in doing that. As it relates to competitors coming into the marketplace, yeah, when time that something becomes successful, our industry is very common where we have followers and they come into the business. So we'll see. You know, we're hoping this becomes very successful, and we see clearly a need for it. And again, as what I said in our earlier comments, that this is really the first opportunity to bring massive amounts of capital through this initiative that Y-Green and has put together. So, you know, we expect that ultimately, yes, there'll be competitors in the marketplace, and us having first mover advantage, I think, will clearly give our company and our partner Hannover Re the benefit of you know, having that first mover advantage.
Should we do maybe one more question? Anyone? Over here. Okay. The question is, how do you prioritize the projects within the Green Corridor, which is actually in Florida, and amongst the cities? Someone want to take that?
I'll be glad to take it. I'm not sure that I understand the question when you say prioritize. Are you assuming there's limited funds or limited capability by us or by Lockheed so that you have to allocate resources on a selective basis?
Typically, yes.
We will have, Y-Green will have management people and service people dealing with the public in every town we go into, and similarly with Lockheed and Energi, they will have a presence, and I think from the experience in Sonoma County, it's totally adequate, so that there's not going to be any prioritization necessary. But these programs are instantaneous. We call it buyer preferred financing. We can qualify a tenant in 30 seconds. You can enter your name, your property address, and get virtually an instant indication of whether or not you qualify for the loan and the amount of the loan. So you put your name in, and very, very quickly, I mean, literally once it's in, you're going to have to wait less than 30 seconds to find out you have a loan available for you that is approved right then for, say, $32,000, 10% of your house value.
That's on the residential front.
That would be on the residential. On the commercial side, it's for smaller buildings. It's the same model. For bigger, more complex buildings, we can give them an indication of what they could loan that in some range, and the lender may require a little more appraisal work in that case, but it's not to determine whether they will get the loan. It's just to determine the size of the loan.
Was the question focused on which jurisdictions will stand up these programs, or the projects within the jurisdictions? Okay.
The former is what she said, yeah.
The important distinction to make is that these jurisdictions are Y-Green's customers. Y-Green stands up the programs for them, and Lockheed Martin and other implementation providers will sort of ski in their wake in the sense that we'll develop projects in the jurisdictions that Y-Green has stood up programs for. Having said that, if I could speak for Y-Green, at least on this issue, I think that's going to be driven by the jurisdictions. When jurisdictions put out RFPs, it'll be Y-Green's job and their competitors' job to respond to the RFPs. That expansion will be driven by the self-selection of the jurisdictions.